A financial crisis can linger for years on end. In our current economic struggle, we see time passing by with absolutely no recovery in sight, while individuals are slipping further into poverty. A long-term downtrend is apparent and cannot be mistaken. You came here for the truth, so let me unveil that for you. So much to discuss here today. I want to include Bernanke blaming Congress for the financial crisis. It's all about he said, she said. It's all about the finger pointing, whether it's the US pointing the finger at China for the downtrend or what have you, but it seems to be that everyone is trying to blame someone else. Let's begin with this. The Fed sending mixed signals, losing credibility in the process. This is obviously to do with the rate hikes. Will they increase interest rates? Ever since they brought them down to zero, the question has been, when are you going to lift off? They haven't been able to do that so far. And in fact, many countries have gone into the negative. It's a whole global economy that we need to worry about. The blue line here is the probability of a rate hike. And that has been declining over time because people realize that there's no economy to support it, so the Fed has to be there to support it. The stock market doesn't necessarily care if it's actual real investment or whether that's just the Fed being there to support it. The stock market is simply there to say, will we have a good trading day? It's the computer algorithms that I talk about all the time. Moving over to China, their industrial profit fell sharply in August. You could see that in red at the bottom right corner, obviously a very significant number, but the trend is what's important. The trend has been declining for years. Now, this is not the only indicator that you can look at, but when you see this one indicator amongst many, you start to piece them all together and realize there is a downtrend that is occurring in many of the different indicators that we've seen. Moving on to Bernanke, the former chairman of the Federal Reserve, hit out on Congress for failing to do its part to bolster America's rebound from the financial crisis. It's saying you failed to do your part. You didn't give out enough money to all of those citizens, and by citizens I mean bankers, and that definitely was the problem why there was a financial crisis. Then they pointed the finger at the euro area and said, look at them. They have lots of unemployment because they didn't print enough money. And if you would just hand out more free stuff to the people and you would just create more tax loopholes for the richest of the rich and so on and so forth, then you wouldn't have a problem. In his newly published memoir, Bernanke admitted that the Fed failed to spot some of the dangers building before the financial crash. This is the irrational exuberance that was talked about by the individual before him, that is Alan Greenspan, of course, saying that they've got to such a high level, but it went way worse under Bernanke than it did with Alan Greenspan. It was bad enough at that point. Well, this just continues on until today. The Bank of Japan may need to ease again with the Fed delay. Of course, they're going to need to do this. It's pretty obvious. They need to engage in the next level of QE. Why? Because that's the only way that the stock market can go up. Real money slowly over time being pulled out of the stock market in Japan, and where it's going is definitely not back into that Japanese stock market. You can definitely see a downtrend there, and ultimately what's happening is that the Bank of Japan has been printing up money and buying up shares. This is a direct purchasing of the stock. Shares moving into what I wrote about in my book. I have these money GPS hot points that occur a couple times throughout the book, and these are extremely crucial points that are discussed. There have been countless cases throughout history of countries trying to print money and use deficit spending to get out of their problems. In long term, it has absolutely never worked. Why then do the governments believe that somehow this time is different and they will be successful at preventing a collapse? It's never worked, not even one time. I've discussed this before, but I have many conversations with those in the finance industry who tell me Japan is the model for a hyperinflationary success. Well, this is an absolute joke. Their economy is dead, and you can see them slowly dying. They have the zombie banks. They are literally buying up shares of their stock market, buying all their debt. It's not working. You're supposed to be a temporary thing where you buy up the shares or buy up the bad debt, and then you would have real investment. But that real investment hasn't come by. It has been decades, and it's just really just a joke at this point. Let's look at this. The trade deficit swelled to $48 billion in August, according to the Department of Commerce. Economists estimated that the trade deficit, or the excess of imports over exports, increased to $48 billion. And we are seeing a time where deficits are continuing to increase consistently. Now, they may fluctuate from here or there, but the trend is increasing deficits. What does that mean? I owe you. I'll pay you later. Just let us take this stuff right now. I will pay you later. As soon as the economy starts to become all rainbows and flowers, well, then we'll give you your money back. Let's look at this here as we see the Baltic Dry Index. I know a lot of the subscribers on here do follow the Baltic Dry Index. Why? Because if you're at the Money GPS, chances are you're most likely informed. It's not mainstream media. This isn't, CNN type viewers. The Baltic Dry Index obviously being one of the more important indicators of the global economy, and you can see this. This is what I look at, the trend. I don't look at day-to-day statistics. What's going on with the trend? It's declining. Yes, it does become volatile in certain instances. Look at what happened during 2008 or the run-up to 2008. It's extremely volatile, and the drop down after, obviously. But the trend is down. And that goes to show you how bad the economy is worldwide. There's much less imports and exports now than there was back during that spike and even before it, because obviously it went a little erratic there, but it's a downtrend regardless. Total NYSE short interest in the monthly change. You can see that more and more people are thinking that the stock market is going to crash. Now, I'm not saying that, but it seems like with a lot of shorts going on, there could be some interest in this decline. Credit supercycle, the deleveraging EM never had. What I want to note from this is the orange line. You may be able to see this hopefully. The orange line is the US GDP. Even though it's fake, it's declining, or it's inclining at a slow rate, but it is going up and up and up. It is a very comfortable and gradual increase. But then we look at other things. We look at these US total credit, that's the green line, and we look at European total credit, EM total credit, BRIC, and China total credit. What I'm seeing here is an increase in these numbers over the past few years. Let's just say since the year 2000, they've all begun to become exponential. So the amount of debt that has been occurred over these past few years, let's say from the year 2000 until now, has been incredible, the amount. But the US GDP, or the GDP of any country, has been steadily and slowly increasing. What this tells me is that debt has been increasing faster than wealth, even using the fake numbers. That is very, very scary. I'm going to move on to just two quick things I want to point out. I'm going to keep covering this. I hope you enjoy this. A robot sold us a Chris Cornell CD at Best Buy. Basically, this individual didn't even have to talk to any single person at Best Buy. He went up to the kiosk, punched in what he wanted, paid with his digital currency, and was able to then go ahead and purchased it. Didn't need to speak to anybody. It was all robotic, all automation. This is the future. Jobs are being replaced, not with overseas positions, but with automation. Speaking of automation, look at this. It said, your next boss, a computer algorithm? Is that the case? I see this happening right now, and it's really going to happen. Look at the robo-advisors for financial companies. Look at what I've been covering. The robotics and automation is replacing jobs. We're becoming useless. Humanity is becoming useless to the elite. Slowly but surely, our jobs are being either shipped overseas or just simply being replaced. They simply don't need us. If you found this video informative, please give me a thumbs up. As I've said before, it truly helps me out to get these videos to come up higher in the search results. Also, at the same time, they come up higher in the NSA Spy Grid, Google, or any of the other search engines. They come up higher in the search results if you help me out and give me a thumbs up. So I appreciate that. Thank you very much. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, more informative. If you go over to Amazon, they have this look inside feature, allows you to flip through the pages of the book and see if you like it. Take care.